Supply and demand zones are simply zones you want to buy from or you want to sell from. But before you buy from these zones or sell from these zones, you simply want to refine these zones to become a point of interest. In this video, I'm going to show you how to trade supply and demand strategy, and most importantly, I'm going to be showing you live examples on the chart. But before going into that, if you're seeing me for the first time, my name is Divine, and what I basically do on this channel is document how I trade, and as well show you the mindset behind my strategy. If you're not something like this, I want you to smash the subscribe button. I'll be right back.
Now, let's for instance say we want to analyze gold. Remember, what I want to show you in this video is simply how to use supply and demand strategy to analyze your trade. Now, first you want to do is to understand what price is doing on the high time frame, and then execute whatever price is doing on the high time frame on the lower time frame. Now, in this case, if you are to analyze gold, you simply want to go to the daily time frame and understand where price is heading to and identify our key levels. So basically, we're going to switch to the daily time frame right now, and clearly seeing or clearly looking at the chart here, you can clearly see that price is in an uptrend. But we want to use trend to confirm that price is really in an uptrend. And if you look closely, if you draw our trend right now, you see that price is basically in an uptrend, right? Price is basically heading to the upside. What's going on? Price is basically going to the upside. And if I'm to put this down to this point, it's clearer here that price is heading to the upside. So basically, on gold, we want to be looking for buys or we want to be looking for buy opportunity. But how do we identify that buying opportunity, or how do we identify where we want to buy from, or whatever we want to do? Now, we want to identify the key levels. Where is our key levels? For us to identify our key levels, simply need to put down this area here is our key level. This area is a key level here. Let me remove this for our chart so we won't get complicated. This area here is a key level, and basically here is a key level. Now that I've identified the key level, what do we want to do next? We want to simply identify zones that is in this key level. Are we having supply zones or are we having demand zones? What zones do you have in this point? If you are having supply zone, what do we do next? If you are having demand zone, what do we do next? That brings us down to the 4 hours time frame where we want to simply understand market structure and as well zones or supply or demand zone. Now, if you go to the 4 hours time frame, if you go to the 4 hours time frame, we can basically see that from this point here, or support key level here, up to this point here, price is simply making an uptrend, right? And for every uptrend, we're basically going to be seeing demand zone, right? And where's our demand zone? For us to be able to identify demand zone, we simply need to understand the type of demand zone that we have. We basically have 4 types of demand zone. We have the rally-based rally, drop-based rally, drop-based drop, and rally-based drop. Now, these are the 4 types of demand zone that we have in the forex market. So how do we identify this zone? Now, for us to identify this zone, we simply want to identify points where there's impulsive move or there is momentum candle. What this means is that any point where you see a momentum move or an impulsive move, there's likely going to be a demand zone or supply zone around that area. Now, in this case scenario, we want to simply identify if there's any supply or demand zone from this key level here up to this key level that is here. How do we do that? Now, for us to identify this zone, we want to simply look at this point, and this place is an impulsive move where price was simply going to the upside, and at the point price went into a resting phase. So this point here is simply likely going to be a zone, right? Because here was simply a resting phase for price. And what you can clearly see is that price expanded out of that resting phase and also gave us an impulsive move. So basically, we have seen a demand zone at this point here. Remember, for you to identify a demand zone, we want to simply identify where there's impulsive move or momentum candle, right? We want to simply identify where there's impulsive move or momentum candle. Now I've identified this demand zone here. What do we do next? We want to simply understand what price is doing at this point here, because all these points are also important, right? All this area here are also very important because we want to simply know where to buy from or where to sell from. Now, if you look closely here, you can see that price is currently here in a resting phase, right? And this point is simply a demand zone where we'll have an impulsive move, a resting phase, and a drop. So this place is basically a drop-based drop, which means a supply zone. That means there's chances that price is likely going to be selling from this point or any of these points down to this demand zone here, because there's a reason we have this demand zone here. So basically, what I'm seeing on the chart right now is that price is simply in a resistance key level, and price is giving us every information that price is likely going to sell to the downside to trigger a demand zone. And where is the next point of demand zone? This point is simply the next point of demand zone. So basically, what I'm seeing on the chart here, I'm simply seeing that this point where price gave us, or price got to the resistance key level, gave us a drop, gave us a base, and gave us a drop. That means drop, base, drop, which is basically a type of supply zone. Now, what do we do next? Since I've seen this supply zone here, we want to simply go and refine this supply zone as well as refine this demand zone, right? So basically, we're going to be refining this recent supply zone here and as well this recent demand zone to become a point of interest, right? Now, we're going to do that on the 1 hour time frame, and on the 1 hour time frame is simply the point where we find a supply zone to a point of interest. That means before you enter from any demand zone or supply zone, you simply have to refine that zone to become a point of interest. And on this case scenario, we're going to be doing it on the 1 hour time frame. Now, on the 1 hour time frame, let's first of all refine this supply zone that we saw here. If you refine the supply zone, you basically see that this point here is simply our refined supply zone. And how do you refine supply zone? You want to simply refine supply zone by simply representing those zones with a specific candlestick. It can be your dodgy candlestick, it can be your whatever candlestick that you know about that they taught you in BB Pips. You can simply represent it with a particular candlestick that you can identify in this point. So basically, this point here is simply our what? Supply zone, right? This point is simply our supply zone. Now, how do we know where to enter from? Okay, let me refine the demand zone as well too. Now, if I to define this demand zone now, what I want to basically do is to represent this whole price action here with a specific candlestick that is very clear and obvious. Now, if I to define it now, you can basically see that this point here is very unique. We are seeing all of this price action that happened here, and all of this, rejection and all of those stuff. This thing has a reason why it came out. So basically, this point is a point of demand. Now, basically, we have refined the supply zone and we have refined the demand zone. Now, what this means is that this point or this place where I've refined now is simply our point of interest. And basically, what else we want to do next is to identify liquidity. That means for every point of interest, there's a liquidity. We want to identify where the liquidity is and simply use liquidity to know where we're going to enter from. So basically, what next we want to do now is to understand where the liquidity is and simply use liquidity to determine where our entry is going to be. Now, in this case scenario, if you have to look for where to enter from or how to enter from, you can simply see that price have already triggered this supply zone here and price is reacting to the supply zone. So basically, what I want to see price do this. What I want to see price do is this. First, price have taken out this buy side liquidity here and have triggered our supply zone. That means everything is ready for price to sell. And basically, where is price going to sell to? Price is going to sell to the next point of demand, which is simply at this point here. So price is simply selling to the next point of demand. And from there, we can basically know if you're going to buy at that demand zone or price is not going to hold that demand zone. So basically, how do we know where to enter from? Because price is already reacting from a supply zone. We want to simply follow price and sell to the demand zone, even if price is an uptrend. Now, the reason for this is simply to take advantage of our knowledge. We want to look for where we're going to sell from. Now, if you look closely here, you can see that there is sell side liquidity at this point here, right? Price is simply inducing sell side liquidity after price have swept buy side liquidity. Price have taken out buy side liquidity, and price is likely going to take out sell side liquidity and trigger into this our demand zone. So basically, what I want to see price do is this. I want price to simply sell to the demand zone. Now, for us to know where we're expecting price to sell from, we simply want to identify what price has done from this point to this point here. And now, if you look closely, how did price move from this point to this point? Price simply gave us a rally, a base, and a rally, which is a demand zone. Now, this point here is simply a demand zone here. That means there's a zone here. And I want you to bear in mind that this zone now, because we are seeing it on the 1 hour time frame, it is referred to as a point of interest, right? So price has given a point of interest here. I want to basically do is to define this zone here to a specific candlestick, and it becomes a point of interest. Now, there are basically about 3 types of point of interest. We have the point of interest caused by a supply zone, we have the point of interest caused by a demand zone, and we have the third one, which is point of interest caused by a failed supply or a failed demand zone. Now, in this case scenario now, we are simply seeing that here is simply a rally, a base, a rally, which is a what? Demand zone. Now, if I have to define this zone now, I'll simply go to the 15 minutes time frame and refine this zone to see what it is saying. Now, if you have to define this zone now, I can basically see that this point here is simply our refined zone, right? This point or this area here is simply our refined zone. And basically what I want to do simply do is this. Once price to come back to this zone here, and look for opportunity for a sell to the demand zone. That's basically what we're going to be doing on this particular pair right here. So basically, what we're looking for this point now is the price to simply come back to this zone here and then drop to the demand zone. So basically, an entry on gold this week is to simply look for what price is likely going to do if price come back to this point here. Put our stop loss right above this high here, and then target this zone as TP1, right? Let me switch to the 1 hour time frame so it'll be clearer. Now target this one as TP1, TP2, and basically head to the demand zone, which is our what? TP3. So basically, an outcome or an overview of what's likely going to happen to gold is to simply see how gold is going to sell from this point of interest there. Remember how gold point of interest, we find a demand zone that failed and it became a supply zone for a point of interest. So basically, we want to simply see how price is likely going to come out of this zone here and then drop to the downside. And we have simply identified our take profit 1, our take profit 2, and possibly our take profit 3. And I'm basically saying that this point here is our take profit 1. This point here is our take profit 1. Here is our take profit 2. Lastly, the demand zone is our take profit 3. So basically on gold, we're looking to see how we're going to sell from this point here down to this demand zone here. And this is the outcome I'm looking for on gold come this week. I think this will be all for this video. I'll see you on the next one. Peace.